Many new investors, when they first start, end up losing money because they don't know the right information on what to do and what not to do. Also, if you're not patient enough to just watch through the whole video, yeah, you're cooked. As you can see here with these examples, the guy on the left lost over $60,000 all time. The guy in the middle lost over $200,000. And the guy on the right lost over $21,000. And this is what, negative 76%, negative 98%, and negative 90%. And these examples could have been easily avoided. Right now, this is my growth portfolio sitting at $117,000. And I can tell you, this investing stuff isn't rocket science. You just need a little patience and some research. And I believe that anyone can do well in the stock market. So today we're going to talk about 3 things you have to avoid to not end up like this. So the number 1 thing you must avoid is FOMO buying and panic selling. Alright, so basically FOMO buying means you're chasing hype at the top where prices are already inflated. And panic selling means you're locking in losses and selling at the bottom when fear takes over. So basically investing works best when you have a plan and you stick to it. Because markets, they move up and down. But sometimes your emotions could swing for the worst and cause you to make some bad decisions. Buy what fits with your strategy, not because you're scared to miss out. And sell because it makes sense, not because you're scared of it to drop even more. Perfect example of FOMO buying is GameStop. This GameStop here is there was no point for GameStop to go up except hype. During 2021, if you earn some money from this GameStop trade, good for you. But many people definitely lost money during this insane drop in this January 29th to like February 12th, because many people will buy it like $60, $50 because they were afraid of missing out. And look what happened. It just absolute tanks to like $10 later on. It does happen again, but look what happened again. It literally just tanks once again. Another 33% down. Another example of FOMO buying, which is this one's really recent actually, July 21st, 2025, is Open Door Technologies. It does have some backings of why people buy Open Door Technologies, but the rate it grew in was way too fast. I'm gonna be real with you. It grew crazily up to $4.71. And I'm telling you, there's a lot of people who bought during the $3, the $2.50, right? And then they just got absolutely dumped down as it drops to just $2.14 in July 23rd after just 2 days from the peak. And this if you don't play your cards right, you could end up losing a lot of money fast. AMD is a great example of panic selling during the it was April, during all the tariff stuff happening. During like the March to April, if you were like selling during that time, that means you most likely missed the last 3 months of constant growth of AMD. 78% in 3 months. That's crazy. Imagine missing that because you sold during April. Of course, selling is not always the worst idea, but you can't sell just because of panic and seeing your numbers drop. Another way new investors quickly lose money is through day trading and options. Many new investors who get into day trading and options think they got this main character mentality. I'm not gonna lie. I'm being so for real. Like a lot of my friends, like when they got into it, they thought they were him and that they could beat the numbers, but it ends up in like after a year or so, they end up losing money. As you can see here, these statistics were they were grabbed online from some research from University of California, but the research is a little later. It's like from 2019, but I feel like it's still relevant today. Just want to let you guys know. Where they say around 70 to 90% of day traders lose money over time. For cryptocurrency, shows up to over 80% of retail crypto investors. Forex trading is 70 to 80%. And it says long-term index fund investors, historically, most who invest and hold in diversified index funds make money over 10 plus years, but panic selling during downturns causes losses for many. Like I'm telling you, options and day trading is like the only way you guys actually see such red numbers as you can see in the right. Like options, like if you're new, just don't get into it. Just trust me, bro. Just search up like people losing money in options, and then like so many people lose money. Like you might be like, yo, Ethan, a lot of people earn a lot of money though. Why can't that be me? Like if you go to a casino like in Las Vegas and some shit, and you see some guy playing like roulette and he's winning hella lot of money, does that make it so you should go on roulette and start putting a lot of your life savings into that shit? Like, no. Just because someone's making a lot of money doesn't mean you will. Also, for day trading and options, like you're going against like massive hedge funds, and people who've been doing this for their whole ass life, bro. Like, you're new. You're not beating them. You're not him. And the last reason is a lack of researching and overconfidence. Because the lack of research leads to panic selling and FOMO buying. Because if you don't research enough, you're gonna freak out when you see your company stock price is dropping, and then you go FOMO buy because you didn't research enough to realize it is FOMO buying. And overconfidence can be built by just investing into stuff that people told you to invest or some YouTuber that told you to invest into. Because if you don't research it to yourself and you build this overconfidence, yeah, you're cooked. It's just panic. You're gonna end up panic selling. Like it's just do your own research. It takes like 20 minutes a day. That's the 3 top reasons I believe why new investors lose a lot of money when they first start. And yeah, that's really it. All I had to say. Yeah, if you made it all to the end, good job. You don't have a goldfish brain and you have patience enough to invest. And yeah, that's really all I got to say. I'll see you guys on the next one. Peace.